having a personal investment statement for yourself is crucial. This will be outlining your investment goals and how you plan on achieving them. But you need to be in a sound mind when you create this plan for yourself, because you're going to be setting guidelines and rules for yourself to follow in the future when you might not be in the sound mind. Hello everyone, my name is Zach and welcome to On Cash Flow, where I help you become a master of your own cash flow. Now let's get started. Let's first start by talking about what you should be doing with your personal investor statement. You should be setting some primary objectives or some primary goals for yourself. So you might need to ask yourself, why are you investing? What are you investing for? And when you're answering those questions, it's best to be as specific as possible and to add time or numbers to those goals. So you want to add dates and you want to add numbers. Be as specific and time-bound as possible. In order to help you get started, here are some of my current investment objectives. Now that I am partially retired, my objectives have changed versus when I was accumulating and when I was working and trying to achieve financial independence. So here are some of my current objectives. I will contribute the maximum of $7,300 in 2022 to my HSA. I will do a Roth IRA conversion up to the amount that would allow me to stay in the 0% tax bracket. I will have a 100% stock portfolio. I will buy 2 rental properties in 2023. So those are some of my objectives that I have on my personal investor statement. And whatever goals and primary objectives you have, you can take this as a framework to create your own. And this doesn't only have to apply to investments, by the way. You could have a personal statement that is for all of your finances, not just your investments. So you could expand this to include your budget and any kind of other financial goals. Having a personal investor statement was essential to me on my journey to financial independence. And that's why I have another video that I do want to share with you where I share my actual journey on how I achieved financial independence at age 27. So stay to the end of this video because I'm going to redirect you to that video. But first, let's talk about some of the most important investment aspects that you should have on your statement. So first off, I think it's super important for you to establish guidelines for yourself when it comes to your asset allocation. So you should be saying, what is your target asset allocation? What kind of asset allocation do I want to have in my investment portfolio? For me, my statement is very, very simple. I want to have 100% stocks, and I want those 100% stocks to derive of 80% total US stock market and 20% total international stock market. That is my target asset allocation. And you should include this also in your investor statement. Not only do you want to have your target asset allocation in there, you want to have a plan or some guidelines for how you plan on rebalancing that asset allocation, because there is probably going to be a time when your asset allocation drifts away from what your target is. That is perfectly normal. So you need to have a plan for what you're going to do. Here is mine. I will rebalance my portfolio if my investments drift plus or minus 5% or more. So for example, since I have an 80% allocation goal for my total US stock market index fund, I will allow it to drift anywhere up to 85% or anywhere down to 75%. So plus or minus 5%. If it gets to that, if it gets to 85%, if it gets to 75% or lower or higher, then I will rebalance back to my targeted asset allocation. And you should probably have a guideline like this in your personal investor statement as well. Another super essential part of your personal investor statement is when you're going to hit the like button on this video. And that should be right now. If you take the second to hit that like button on this video, I would really appreciate that. Okay, but seriously, let's get on to another important part of what you should have in your investment statement. And that is you should have some guidelines for your tax strategy. What kind of strategy are you going to pursue in order to control your income taxes? Here are some guidelines and some rules that I have for myself. So one of them is I will only realize long-term capital gains. You get long-term capital gains after you have held an asset for more than 1 year. Another guideline for myself in order to control my taxes is that I will be contributing to my HSA. As I mentioned previously, I will put the maximum amount allowable into my HSA account, and I will get a tax adjustment for that, or a tax deduction. Another part of my tax strategy, now that I'm partially retired, is I will control my adjusted gross income to where I qualify for the 50% savers credit. So the saver's credit is a tax credit that you could receive if your income falls in a certain range and you contribute money to your retirement accounts. That is a big part of my tax strategy in order to make it where I don't have to owe any federal income taxes in early retirement. Not only do you need those in your investor statement, you need to have plans for when the market is doing what the market does. One part of this is you should develop a strategy for what you're going to do when there is a bull market. Let's say your investments go up by 20% this year. What is your plan if your investment portfolio goes up by 20% this year? What are you going to do? For most of us, the strategy that we should have in this scenario is probably pretty easy. One that I have is I will just keep investing as normal. If I was still accumulating, contributing to my investments significantly, then I would just say I'm going to contribute the same amount. I'm not going to change anything when it comes to my contributions. Another strategy that I would have in there is I will rebalance if I need to, because you might have an asset class that is going to go up a lot faster than the other ones, and it might throw your asset allocation out of whack. So that would be part of my bull strategy. Pretty easy to develop a strategy for a bull market. However, you also need to have a strategy for the reverse. What happens if there is a bear market? Let's say your investments drop by 20%. So what is your plan then? What are you going to do if your investments drop by 20% or more? And your strategy might be slightly different whether you're accumulating or if you've already reached financial independence or early retirement. Now, one thing that most of us should probably have in our strategy is I will not panic sell my investments. I will not exit the stock market by selling at a loss. So that is something that most of us should probably have in our investor statement. But one that I have, now that I am partially retired, is I will adjust my investment withdrawals downward according to the amount that it decreased. So right now I'm experimenting with using the percentage of portfolio withdrawal strategy when it comes to my partial early retirement. And so if there is a decline in the market, I will adjust my withdrawals slightly downward to match how much it declined. If you're still accumulating, you might have a guideline in there that says, well, in a bear market, I will try to take advantage of the decreased asset prices by shifting some of my spending into investing more money so that I can get more shares at a cheaper price. But regardless, you should probably have a guideline or a strategy for both a bull market and for a bear market. Now, really quick, I want to know from you in the comments below, what is an investment objective or an investment goal or a guideline that you have for yourself that you want or you plan on including in your personal investor statement? Please let me know in the comments below. I would really love to hear from you and see what you have to say. And now, while we've covered some of the most important things you should have in your investor statement, one question that needs to be answered is, how often should you be looking at your investor statement? How often should you change your investor statement? Well, I think at a minimum, you should be looking at your investor statement at least once annually, maybe at the beginning of the year, the end of the year, on your birthday, whenever you want it to be. I think annually is a pretty good plan for evaluating your investor statement because things can and do change. You go through different life cycles. You go through saving for retirement and entering retirement, all these kinds of things. But beyond that, you should also be looking at your investor statement anytime you want to make any kind of somewhat drastic change to your portfolio or to your investments or anything like that. So if you do experience a bear market and you're panicking a little bit, look back at your investor statement and see what you put when you were in a sound mind. And you said, hey, I will not panic sell my investments. I will not exit the stock market. So you need to follow those guidelines. They're there for you because you made them by yourself. If you take the small amount of time necessary to plan and create your investor statement, it's going to pay you big dividends in the future, and it's going to allow you to achieve financial independence in early retirement that much faster. It certainly helped me along my financial independence journey. And that's why I made a video on my full story of how I achieved financial independence and retired early at 27. And I want to share that with you, okay? That video is going to pop up on the screen in just a second right after I get off the screen. Thank you so much for watching this video. I'm Zach from OnCashFlow.com, and I hope to see you next time. For me, my personal investor of your investment strategy that you should have, one part of this is you should have a strat, but regardless, you should probably have a strategy for the bull market and for a bear. But I would love for you to share that and I would love to see what you have.